Happy Friday, everyone. It's February 28th, and thanks for your question. That's a very important question. In my opinion, why the market has been trading volatile and sloppy the last few days is for a few main reasons. First, uncertainties about President Trump's policies when it comes to tariffs, when it comes to immigration. There's a lot of uncertainties, both on the consumer front, both and also the CEO and business front. They're unsure of how to invest with the uncertainties of these policies. And other countries around the world, with these tariff negotiations, other countries aren't sure necessarily how to act. Should they drop their tariffs? Should they get more aggressive? So there's uncertainties right now with the policies. On top of that, 2025 seems to be a year of more of fears of a growth slowdown rather than inflation reaccelerating again. So that's another thing to keep in mind is fears of a growth slowdown. And 2023 and 2024 were very strong years. Excuse me. So yeah, I mean, one major thing that really spooked the markets yesterday was pending home sales falling to their lowest level on record since 2001. So that was pretty spooky. The upside for that is that 30-year mortgage rates hit a level of 6.76%, the lowest of 2025, due to these slowing growth fears. But this is leaving the stock market to trade very volatile. And then it didn't help today, at least midday, when President Trump and J.D. Vance had a meeting with Ukraine President Vladimir Zelensky in the Oval Office, and they had a big disagreement. And that left markets trading down right after the meeting. Luckily, at the end of the day, the market started to go up the last hour of trading. I think that was institutional buying. But other than that, I mean, this was a very bad month in the market. This was a very bad week in the market. So let's hope that next week and March in general will be better. But to sum up this video, the main reasons are fears of growth slowdown and the uncertainties of Trump's policies. And before I end the video, I want to talk about one quick thing. We also had PCE inflation data that came out today as expected at 2.5% year over year and 2.6% for core year over year. This is actually a slight slowdown from last month. So that's good news in, the fight, for inflation. This increases the odds of a rate cut in the June meeting because of the fears of a growth slowdown and inflation going down as well. So that's the silver lining of a growth slowdown, is it brings back rate cut odds, which is ultimately good for the markets. But yeah, I mean, this is 2025 for you. It's going to be year of volatility. It's going to be honestly, I think we're not going to worry about inflation anymore. I think we're going to be worried about growth slowdowns due to these new policies and uncertainties about them. Let's stay tuned.